Greetings candidates and welcome to the advanced taxation lesson. The subject is taxation of cross-border activities. In our today's lesson, we're going to focus on the subtopic, a regional perspective with reference to East African community. Regional perspective with reference to the East African community. Now, candidates, in our today's lesson, we will study the challenges in cross-border activities. We look at the tax harmonization efforts in the East African community, as well as the impact of the harmonization efforts, the impact of the harmonization efforts. Now, cross-border economic activities, candidates, play a crucial role in fostering regional integration and economic development. However, the taxation of these activities can be complex and challenging, often leading to double taxation and hindering cross-border trade and investment. And to address such challenges, regional economic blocs like the East African community have implemented various measures to harmonize tax policies and facilitate cross-border economic activities. And there are various challenges, all right, that are associated with cross-border activities. One of the challenge is double taxation. There are many challenges associated with cross-border activities. One of them is double taxation. Double taxation. That means that the income earned by a resident of one country from the sources in another country may be taxed by both countries, leading to unfair burden on the taxpayer. For example, if a resident company generates income from Ethiopia, a resident Kenyan company may generate income from Ethiopia, which is a different jurisdiction. There could be chances that the Ethiopian tax authorities may tax that company, and the Kenya Revenue Authority may also tax the same income, leading to double taxation. So the income that is earned by a resident of one country from sources in another country may be taxed by both countries, leading to double taxation, leading to unfair burden on the taxpayer. That is one challenge that is associated with cross-border activities. Challenges of cross-border activities. We are studying the challenges with reference to East African community. But before we look at the harmonization within the East African community, it's important for us to understand some of the challenges. The second challenge of cross-border activities is transfer pricing. Transfer pricing. Transfer pricing. Manipulating the transfer prices of goods and services between related entities in different countries can shift profits to what we call low tax jurisdiction, thereby reducing the overall tax revenue. So that's one of the challenges also associated with cross-border activities: transfer pricing. 3, tax avoidance and tax evasion. Tax avoidance and tax evasion. Tax avoidance and tax evasion is another challenge of cross-border activities. Cross-border activities can provide opportunities for taxpayers to do what? To exploit loopholes, and also engage in tax avoidance or tax evasion schemes. Tax avoidance and evasion. That is number 3. Number 4 is tax administration complexity. Tax administration complexity. Managing cross-border taxation requires coordination. It requires cooperation between the tax authorities of different countries, which may increase administrative complexity. That's a challenge associated with cross-border activities. It may lead to administration complexities. So these are just 4 of the challenges associated with cross-border activities. Today we are studying regional perspective with reference to East Africa community. So the next question is, what are the harmonization efforts in the East African community? What are the tax harmonization efforts? Tax harmonization efforts. Given the challenges associated with cross-border activities, what efforts has East Africa community put in place to reduce some of these challenges or to mitigate against the challenges of cross-border activities? Now, candidates, the East African community as a regional bloc has taken significant steps towards harmonization of tax policies and also reducing barriers to cross-border activities. The bloc has put in place measures. It has taken significant steps that have gone a long way in harmonizing tax policies and also reducing barriers to cross-border activities. The first effort, establishment of common external tariff. Establishment of common external tariff. The common external tariff applies a uniform set of tariffs on goods imported into the East African community, and that eliminates tariff barriers and promotes fair competition within the bloc or within the region. So that is one of the efforts. Establishment of common external tariff. Establishment of common external tariff. 2, establishment of a customs union. Establishment of customs union. establishment of customs union. The East African Community Customs Union facilitates the movement of goods within the region without customs duties, and that simplifies cross-border trade and reduces transaction costs. Establishment of customs union. Three, development of a common market. Development of a common market. The East Africa Community Market allows for the free movement of goods. It facilitates or allows the free movement of services, free movement of capital, and also free movement of labor within the region, which enhances cross-border activities. Harmonization of investment policies, number 4. Harmonization of investment policies. The East African Community has harmonized investment policies to promote cross-border investment and also to provide a more predictable investment environment. Harmonization of investment policies. The 5th point is the establishment of East African Tax and Development Institute. Tax and Development Institute. Establishment of East Africa Community Tax and Development Institute. Now, the East African Tax and Development Institute provides technical assistance and capacity building to East Africa Community member states in tax policy and administration. Establishment of East African Tax and Development Institute. Number 6 is development of double taxation agreements. Development of double taxation agreements. Or put it accurately, we can say negotiation. Let me say negotiation. Negotiation of double taxation agreements. The East Africa Community has negotiated DTAs with several countries to reduce double taxation and facilitate cross-border investments. So these are some of the measures that the East African Community has instituted in order to ensure that there is economic development within the East African region. These are some of the measures that have been put in place to reduce or to mitigate against the challenges of cross-border activities. Now, we now want to study the impact of these tax harmonization efforts. What has been the impact of tax harmonization efforts within the East African Community? Impact of tax harmonization. Impact of tax harmonization. Now, the East African Community's tax harmonization efforts have had a positive impact on cross-border economic activities, including increased intra-East African trade. These efforts have led to increased it has led to increased intra-East Africa trade, East Africa community trade. Trade between the East Africa community members has increased as a result of the tax harmonization efforts. Number 2, attracted foreign investment. These harmonization efforts have attracted foreign investment. The East Africa community has attracted increased foreign investment due to its harmonization investment policies and also predictable regulatory environment. Number 2, the efforts have reduced tax disputes, reduced tax disputes have been reduced because of the tax harmonization efforts. Why? Because of the negotiation of the double taxation agreements. This has helped to reduce tax disputes between East African member states and cross-border investors. The fourth impact is in relation to administration. These harmonization efforts, tax harmonization efforts, have improved tax administration. Improved tax administration. Improved tax administration. The East Africa member states have improved their tax administration capabilities through the technical assistance and capacity building provided by the East Africa Tax and Development Institute. The establishment of East Africa Tax Development Institute has led to improved tax administration between the member states because of the technical assistance provided to the member states by this institute. Do you understand? So, candidates, these are the impacts of tax administration, tax harmonization efforts in East Africa community. So, in this lesson, candidates, we studied the challenges. The topic is regional perspective with reference to East Africa community, and the topic is taxation of cross-border activities. We've studied the 4 challenges of cross-border activities. 1 is double taxation. Number 2 is challenges related to transfer pricing. Number 3, tax avoidance and evasion. These activities can lead to tax avoidance and evasion. Number 4, tax administration complexity. Then we've gone ahead to highlight the efforts that have been put in place by the East Africa community. The first is establishment of common external tariffs. Number 2 is establishment of customs union. Number 3, development of a common market. Number 4, harmonization of investment policies between the member states. Then lastly, we have the establishment of East Africa Tax and Development Institute. We've gone ahead to study the last one here is negotiation of double taxation agreements between the member states. Then we've gone ahead to study the impact of these harmonization efforts. We've seen that these efforts have led to increase in intra-East Africa trade. Number 2, the efforts have attracted foreign investment. Number 3, there's been reduced tax disputes. And lastly, the efforts have led to improvement in tax administration between the member states. Of course, candidates, that does not mean that there are no challenges within the East Africa community as far as cross-border activities are concerned. right? There could be challenges, and there are challenges. Despite the progress made, there are still challenges in harmonizing tax policies and effectively managing cross-border taxation in East Africa community. And the challenges, we can highlight some of them. The difference in tax rates and structures. We have different tax rates and structures within the member states, right? The East Africa member states still have varying tax rates and structures, which creates distortions and opportunities for tax arbitrage. Another current challenge is the capacity constraints of the tax authorities, because some East Africa member states face capacity constraints in effectively administering the cross-border taxes, which then leads to enforcement challenges. There are also other emerging tax issues. The increasing complexity of cross-border economic activities, such as the e-commerce, such as the digital economy, which requires ongoing adaptation of tax policies and administration systems. So there could be progress made within the East Africa community, but there are still challenges which the community is still grappling with. So that will mark the end of today's lesson. But before we close the lesson, allow me to give you an assignment. Today's assignment, I have 4 questions. These are your revision questions. Number 1, what are the primary objectives of regional integration within the East Africa community and the common market for within the East Africa community? Then number 2, how do the East Africa community approach trade harmonization and coordination of policies among member states? And what measures are in place to facilitate this process? Number 3, what are the economic, social, and political impacts of East Africa community on their member states? And how do these contribute to the development and growth of member nations? Number 4, what challenges do the East Africa community face in achieving the integration goals? Conversely, what opportunities arise for member states due to regional integration efforts? These are 4 questions. Please attempt the questions. In our next session, we are going to study the regional perspective with reference to COMESA. Bye-bye.